In 2007, Warren Buffett made a bet with his employees. He bet them $1 million that he, the third richest man in America, paid a lower tax rate than any of them, including his secretary. He won the bet. His tax rate? 17.4%. His secretary's? 30%. And that's Warren Buffett, the good billionaire who actually wants to pay more taxes. Wait until you hear what the others are doing, because what I'm about to show you is going to make you realize the tax system isn't broken. It's working exactly as designed, just not for you. Today, I'm going to show you exactly how billionaires legally pay less in taxes than you do on your morning coffee. This isn't illegal. It's not even shady. It's so normal that there's an entire industry built to make sure rich people never pay taxes. And the crazy part? You could use some of these tricks too. You just don't have enough zeros in your bank account to make them work. First, let's get one thing straight. When normal people, like us, make money, it's simple. You work, you get paid, the government takes their cut. It's like a subscription to society that auto-renews from your paycheck. But billionaires, they're playing a completely different game. They've basically jailbroken the tax system. And I'm going to show you exactly how they did it. Here's the first thing you need to understand. Billionaires don't get rich the way you think they do. Jeff Bezos' salary at Amazon? $81,000 a year. That's it. Less than a junior software engineer at his own company. Mark Zuckerberg? $1. $1 a year. You're thinking, wait, Bezos is worth $170 billion. How is his salary only $81,000? Because salary is for poor people. I'm serious. The way you make money, trading your time for a paycheck, that's the most taxed income in America. It's like playing a video game on the hardest difficulty while billionaires are using cheat codes. Here's the secret. Billionaires don't earn money. They own things that become worth more money. And here's the beautiful part. You don't pay taxes on things becoming more valuable until you sell them. It's like if your Pokemon card collection went from $10 to $10 million. The IRS can't touch you until you actually sell the cards. So what do billionaires do? They never sell the cards. This brings us to the holy trinity of tax avoidance: buy, borrow, die. It sounds like the worst motivational poster ever, but it's genius. Step 1, buy assets: stocks, real estate, companies, art. Step 2, never sell them. But how do they buy groceries? Great question. They borrow. Here's how it works. Let's say you're Elon Musk. You own $200 billion in Tesla stock. You need $10 million for a new mansion. Do you sell stock and pay taxes? Hell no! You go to a bank and say, hey, I have $200 billion in stock. Can I borrow $10 million? The bank practically throws money at you. The interest rate? Maybe 3%. Now here's the magic. Loans aren't income. The IRS can't tax borrowed money because technically it's not yours. You have to pay it back. Except, do you really? Because step 3 is die. I know, dark turn, but stay with me. When billionaires die, their heirs inherit everything. And thanks to something called stepped-up basis, which sounds boring but is the cheat code of all cheat codes, the heirs inherit the assets as if they bought them at today's price. Let me explain with pizza. You buy a pizza for $10. Over your lifetime, it becomes worth $1 million. It's really good pizza. Normally, if you sold it, you'd pay taxes on $999,990 in profit. But if you die and your kid inherits the pizza, the IRS pretends they bought it for $1 million. If they sell it for $1 million, they owe 0 taxes. It's the ultimate get-out-of-jail-free card, except jail is taxes and free is actually free. But wait, it gets better. Ever heard of depreciation? It's basically telling the IRS that your stuff is becoming worthless while it's actually becoming more valuable. Here's how it works. You buy a building for $10 million. You tell the IRS this building is falling apart. Every year it's worth less. So they let you deduct that loss from your taxes. Meanwhile, in reality, your building is worth more every year because real estate goes up.
It's like claiming your iPhone loses value while secretly knowing it's a rare vintage model collectors will pay millions for. Donald Trump famously used this one trick to avoid taxes for almost 2 decades. One building, 2 decades of tax-free living. But here's my favorite part. You can depreciate the same building multiple times. Buy it through one company, depreciate it. Sell it to your other company, depreciate it again. It's a tax deduction printer. So the next time you look at your paycheck and see the taxes taken out, remember, you're paying the price of admission for playing the game on hard mode. The billionaires aren't just playing on easy, they designed the game. And the system isn't broken, it's just not built for you.
Let's talk about charity. When billionaires donate, they're not just being nice, they're playing 4D chess with the tax code. Here's the play. You have stock worth $1 billion that you bought for basically nothing. If you sell it, you owe $200 million in taxes. But if you donate it to your own charity, you get a $1 billion tax deduction and you still control the money through your foundation. It's like donating your car to yourself and getting a tax break for it. The Bill Gates Foundation, the Zuckerberg Initiative, these aren't just charities. They're tax-advantaged vehicles that let the ultra-wealthy control their fortunes while paying 0 taxes. And the best part? Their kids can run these foundations forever, drawing million-dollar salaries for managing the charity. It's generational wealth with a tax-free cherry on top. Next up, offshore accounts. Remember playing hide and seek, and there was always that one kid who found a spot so good nobody could find him? That's billionaires with their money. The Cayman Islands, Bermuda, Ireland, these aren't just vacation spots. They're where money goes to hide from the IRS. Apple had $250 billion sitting in Ireland. Google uses something called the double Irish Dutch sandwich, which sounds like a weird coffee order, but is actually a way to route profits through multiple countries to avoid taxes.
Here's how simple it is. Your company in America licenses its own technology from your company in Bermuda. You pay yourself massive fees, which count as expenses in America, tax deduction, and income in Bermuda. 0% tax. You just played yourself and won. Here's another trick. Stock options. CEOs get paid in stock options that don't count as income when they receive them. It's like getting a lottery ticket that you know will win, but not having to pay taxes until you cash it in. But here's the twist. They often never cash them in. They use them as collateral for loans, part of that buy, borrow, die strategy. Or they exercise them in years when they have massive losses to offset the gains. It's like being able to choose exactly when your paycheck arrives based on when you'll pay the least in taxes. Imagine telling your boss, actually, don't pay me this year. Save it all for 2027 when I'm planning to have a tax-deductible disaster. Here's what really gets me. All of this is legal. The tax code is 6,555 pages long. You know who has time to read that many pages? People who can afford to pay a team to read it for them. The average American spends 13 hours doing their taxes. Billionaires spend 13 seconds signing whatever their accountants prepared. Those accountants found every loophole, every deduction, every credit buried in those thousands of pages. But here's the thing, and this is important. The system isn't broken. It's working exactly as intended. These loopholes aren't accidents. They're features, not bugs. They were put there by politicians who, surprise, get campaign donations from the same people benefiting from them. So what can you do? Honestly, not much with a regular salary. These tricks require having assets, not income. They require playing the long game with money you don't need to touch for decades. But here's what you can do. Understand the game. Start thinking in assets, not income. Max out your 401k, use tax-advantaged accounts, and remember, every dollar you save on taxes is a dollar you can invest. And maybe, just maybe, if enough people understand how this game works, we can pressure politicians to change the rules. Because right now, we're all playing Monopoly, but only a handful of people get to be the banker. What's the craziest tax loophole you've heard of? Let me know in the comments. And if this made you angry, confused, or enlightened, hit subscribe, because unlike the tax code, my content is actually designed to help you. And remember, don't hate the player, hate the game. Then learn the game, then change the game.